Hey everyone, I'm Jenkin, CEO of Coinlist, and excited to be a small part of the Stacks 2 launch event. Today, I'll be talking about trends that we're seeing shaping 2021 and how they set the stage for Stacks 2. But first, I want to explain why I have an illustration of a mug of eggnog on the right. That's what that's meant to be. Around this time of year, I make eggnog for everyone at Coinlist headquarters. I make it from scratch. It's fantastic. Obviously, this past holiday season, no one was in the office, so no eggnog. But this is supposed to be a talk about trends and predictions, most of which will only be half right, I'm sure. But one prediction that will be 100% correct is that eggnog will be back at Coinlist by the end of this year. You're all welcome to come in and join with us in the San Francisco headquarters for an eggnog once we get through all this mess. Anyway, so getting onto the real trends for 2021, this is what I'll be talking about. But actually, before I do that, I do want to talk a little bit about why you should care about what Coinlist has to say about trends in the first place, which is a good question. So let me try to answer that. So we view ourselves as a centralized bridge to the decentralized future, and our role is to help usher in that decentralized future by connecting the most promising projects in crypto with capital and community. We've done that since 2017, starting with Filecoin, right the way through to Dapper's flow sale in the last few months. And we dominate the space. Almost all of the major layer one protocol token sales are run on us. This places us upstream of all of the major centralized crypto finance platforms that you all know. And by being upstream, by being earlier stage, we've got clearer visibility to the trends. So that's one reason why you may care about what we say. The other is that we don't just handle token sales. We distribute tokens to users in Coinlist wallets. You can trade on us. We have our own crypto spot exchange, Coinlist Pro. We support lending for some assets, mainly Filecoin right now. It's looking to expand that in 2021. We also have on-ramps into DeFi, mainly through WBTC. We are the world's leading WBTC merchant. So folks just aren't participating in token sales on us. They're also transacting related to tokens in lots of different ways. And all of this means that we have the global community of early adopters on Coinlist, not just US accredited. I think a lot of people, when they think about Coinlist, they think that's the platform for US accredited investors. But really, in fact, actually most token sales, almost all token sales block US residents. So most of our activity is actually non-US. We still have the US accrediteds. We also have high net worth individuals on the platform, crypto funds, a lot of crypto institutional players like DeFi market makers, miners, validators, and of course, the token issuers themselves and their teams are all on the platform. So they come for the token sale, they stay, they engage in other transactions. And so, we end up being informed in terms of talking about trends. We're informed by this cutting edge community, this early adopter community. Most of you are actually part of that community. How you transact, what you tell us you want. And so that ends up informing a lot of the trends that we'll be talking about. So to jump into the trends, trend number one is Bitcoin everywhere. And by this, I mean the proliferation of tokenized Bitcoin on Ethereum and other protocols. And I think this has definitely been a big story in 2020. You can see here the growth in supply of wrapped Bitcoin over the course of the year. Wrapped Bitcoin makes up 75% of the total tokenized Bitcoin market. And Coinlist, we took a bet on wrapped Bitcoin relatively early on, toward the end of 2019, early 2020. It's been a pretty wild ride over the course of this year. We've minted, I think, something like 33%, 35% of the total wrapped Bitcoin market. So we've learned a lot about this market. We've got relationships with many of the players in the space who are driving it. So we've got some sense of what the trends are here. You may be asking, like, why all this growth? Well, obviously a lot of this maps to DeFi's growth over 2020. And then, of course, almost all of, or a good chunk of the world's crypto wealth is locked in Bitcoin, and no one wants to sell their Bitcoin. So, smart investors want to do more with their Bitcoin than just hold it. And doing more necessarily means moving your Bitcoin or converting it into a form that can be used on Ethereum or other protocols, where a lot of the financial innovation is happening, where yields available, et cetera. So looking into 2021, what we're seeing is, we're actually receiving lots of requests from different communities from most of the major layer one protocols out there to support their version of tokenized Bitcoin. So in 2021, we're expecting to see a lot of horizontal growth. So tokenized Bitcoin, not just on Ethereum, Tezos, but on every major layer one protocol, or most of them. Other tokenized assets are going to come online, but Bitcoin, tokenized Bitcoin is going to continue to dwarf all of them. And also, we're just at the start of this market. There's a lot of vertical growth. Only 2% of the world's Bitcoin's been tokenized. It's actually less than that. So we're expecting to see something around the 5% mark by the end of this year. There's going to be a lot of growth here over the course of the year. So what does this actually mean for Stacks? Well, in a lot of ways, this has set the stage for Stacks. All of this dApp development, partly driven by tokenized Bitcoin. It's been happening off of Bitcoin. And it really just begs for smart contracts and applications much more native or sitting on the Bitcoin protocol itself. And that's obviously what Stacks does. And so notably, also Stacks supports fungible tokens. So the fact that Stacks is sitting on Bitcoin, supports fungible tokens, it means that it's a much more natural home for tokenized Bitcoin. So we predict a tokenized Bitcoin variant for Stacks in the near future, if it's not being worked on already. For Stacks developers who are looking for ideas of what to build or how to take advantage of this, you could just look at the Wrap Bitcoin contract or TBTC contract or RenBTC contract on Etherscan, and immediately you get visibility into which accounts are holding the most WBTC. And it's all the usual suspects in DeFi, lending applications, trading applications, liquidity pools. So a lot of the live product testing and validation has already been done for you. So you've already got a leg up there. Anyway, so we're expecting to see a lot of proliferation of tokenized Bitcoin in 2021, and Stacks being much closer to Bitcoin, natural home for it, natural home for DeFi applications. So excited to see this happen in 2021. So that's trend one. Trend two, small steps away from Ethereum. What I mean here is, we're starting to see some small steps being taken away from Ethereum by some of the more successful protocols, projects. Before I jump too far into this, do you want to say, Ethereum's ecosystem is amazing. It's remarkable. No other platform has driven as much like activity, innovation, et cetera, since Bitcoin, not by a long shot. But the big winners in Ethereum, especially in DeFi, they're increasingly agitated with scaling issues, high fees. We've all heard about these complaints. But some of these teams are actually starting to take steps to address that. And a few events that occurred in 2020, and based on what we're hearing, there's signs of what's to come, we believe, in 2021. And some of those events were, and I'm sure you guys are familiar, Compound's announcement of its new chain, Compound Chain, FTX's choice of Solana for Serum, CryptoKitties creator Dapper Labs moving to its own chain. So, this isn't a mass exodus away from Ethereum, but we think these are more than just one-offs. These are successful, legitimate projects, and they're really showing the way for other projects in the space, setting the patterns. So in Compound's case, the pattern there is that, you build, grow a successful project on Ethereum, eventually move off to your own protocol, you graduate to your own protocol. That's one pattern. In FTX's case, well-resourced team right out of the gate, sidestepping Ethereum from the get-go, starting with another protocol, maybe for performance reasons, in their case, going with Solana. And in Dapper's case, it's much more of a purpose-specific chain need there. In their case, game development, and doing that via their own chain. So we're going to see more of this. Again, it's not a mass exodus, but it will be a trend. We're definitely hearing about this. So all that said, given the resilience of the Ethereum ecosystem and its massive community, we're just as likely to see acceleration there, whether it's ETH2 or other improvements that are going to address scaling, fee issues. So all of that is great for the ecosystem in 2021. What does this actually mean for Stacks? How does this set the stage for Stacks? Well, what it means is validation. There's an increasing acceptance of smart contract development off of Ethereum. It's been promised for years. We're now finally starting to see that promise be realized. We're going to see legitimate teams, successful teams, looking at Stacks and other protocols over the course of 2021. The Stacks advantages, being built on Bitcoin's blockchain as its backbone, legitimate option for development, and excited to see that play out in 2021. So that's trend 2. Trend 3, more guardrails for DeFi. I think we are all very aware of what's happened in DeFi over the last 12 months. Lots of development, lots of innovation, lots of capital flowing in. And I think we're also well aware of some pretty high profile security issues that have spooked the broader community from participating in DeFi. We're hearing about it, like lots of money being left on the sidelines because of these issues. And, if I'm a mainstream DeFi user or potential DeFi user, and there's all these potential exploitations happening, what hope is there for me? If the CEO of a well-known DeFi platform gets scammed, obviously not a security issue with protocol, but was scammed nonetheless. What hope is there for me as a mainstream potential DeFi user? So it's really effectively leaving or resulting in lots of capital, lots of money sitting on the sidelines. And, no surprises there. In 2021, what we're going to see is a much bigger focus on security. A lot of that's going to happen from the DeFi community itself. A lot of that's also going to be driven by centralized platforms, whether it's Binance, us, really attempting to address the fears of these folks that are sitting on the sidelines. We saw evidence of this in 2020, where we launched a Uniswap liquidity pool on-ramp, got a lot of interest from our community. And these are users that could have gone directly to Uniswap themselves and earned Uni rewards directly on their own. But instead, out of fear or what have you, they chose to trust us, bringing more people into this DeFi community. So there's a lot more to be done here. Expect more guardrails for DeFi in 2021. What does this mean for Stacks? Well, Stacks has an incredible advantage already. It's got a major guardrail built in, and that's the fact that it's built on Bitcoin. By using Bitcoin's blockchain for settlement, it's using what's perceived to be the most secure blockchain to date, certainly by everyone's experience or evidence of experience. So I think that's going to go a long way to settling fears on the part of users. It's going to be a big attractor for users, certainly those concerned about security, and then developers as well. So excited to see that play out in 2021. The last trend I'll talk about really quickly, almost out of time, is that we're going to continue to see evolution and mutations of token issuance over the course of 2021. Like a lot of folks have predicted the demise of token sales, but at Coinlist, we're continuing to see consistent levels of capital flowing in, more participants flowing in. It's going to accelerate over the course of 2021 with Bitcoin's price being where it's at. Now, we've seen lots of evolution in the space over the years, but in 2020, there was a market increase in different types of token issuance strategies, stake drops like New Cypher's Worklock, community sales like those of Near and Flow, launch auctions, great way to establish price so you don't have a centralized exchange telling you what your price is. The community decides. DEX offerings, fail launches. Regulators are going to weigh in there, but definitely more innovation happening there. Lots of new stuff happening in 2021 with Polkadot's ecosystem, lots of excitement there. So what does this mean for Stacks? Well, this isn't so much about Stacks being influenced by trends, but setting the trend. 2017 or maybe earlier, the Blockstack team kind of set the stage for community sales, and then didn't just innovate there, but also innovated from a compliance standpoint with Reg A Plus leading the way there. So this is really a thank you to the Stacks team for helping evolve the token issuance business. Really appreciate the work you all have done in pioneering the space. And then thank you all for listening. Hope this was useful. You can find me at coinlist.co. And don't forget about the eggnog invitation, and enjoy the rest of your day.